All right. Okay. 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 Oh my God. Jesus, give me strength, please. All right. If there's anybody who stuck around for the madness, please do me a favor.
Hello, my name is Timothy Lee Rogers Sr., and
Hit
I'm
the
the
like
creator
for
of
the
the Smart Money
algorithm.
Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money
Give a
Manuscript
message
is your
to the
roadmap to
channel.
financial freedom. Inside this
Let's go.
powerful course designed to transform.
Shut up. Sick. I don't want to hear no promo. Why do I look stretched out and why do I look elongated and my green screen ain't working right?
We got your upper body looking longer than the bottom.
Yeah.
Yeah. Do you? I mean, I just came. Well, I've been here a few minutes. I guess you already tried the old reboot, huh? And nothing.
I don't know what's going, man. I'm looking crazy. Look how I look. I look like an old Western movie at the end. Let me see something. Even when I do that, I'm still and see how it's like not editing out the back, like I don't have a green screen. It's got me looking all in my shirt. I was sweating at the gym, so my shirt looking like got the old man neck. But it got me looking like a old kung fu. I mean, on the Western when you used to look real elongated. Am I tweaking? I don't know what Zoom got going on, y'all. I promise you, I don't. Everything is changed and updated inside Zoom. I don't know what's going on. Got me looking crazy. I look chalky looking. I'm blending in with the background. Like my got my new y'all like my new fancy background. Got my new fancy background all set up. Anyway, man. The first night is off to a start, to say the least. It's off to a start, to say the least. Um, all right, man. Let's get to it. Good evening, good evening, good evening, everybody. Uh, First of all, I look crazy, but can y'all hear me? Can y'all hear me okay? Do my audio sound good? I know I look crazy, but does my audio sound good?
We can hear you.
Okay. All right. Um, Good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome, but I also want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. Got the new background. It's behind me again. Yeah, man. Oh man, I forgot my spider. I got to put my spider on there. I got the spot there, and I got the spiders in the cubbies up there. I got the spiders. I got to get it right. Where we somewhere. Got the spiders in there. All right. Welcome to Facilitation February. If you did not catch the memo when I did this a couple weeks ago, Facilitation February is supposed to be the entire month of February. I apologize for missing the first week. I was redoing my setup. I was redoing my setup. I ordered a new PC. I got total revamp the setup. It turned into a complete remodeling reconstruction because when I was breaking the old setup down, it was ruining the walls, tearing the walls up, taking everything off the wall. So I had to move everything out, patch the walls, repaint the walls. And then my PC got delayed and it came later than it was supposed to. And I'm glad it did because the construction part was going longer than I planned. It just was a mess. But we are here. We're here now. Again, I apologize for man, I need my water. I don't know my son that. Yeah, hold on. I don't have my water here. I need my water. Man, I swear I look like an old Western movie. The stream current bit rate is 1206. It's higher than the recommended. We recommend that you use stream bit rate of 2500. Wait a minute. The stream's current bit rate is 1246. Is higher than the recommended bit rate. We recommend that you use a stream bit rate of 2500. That's not higher than 20. Oh my God. Oh my God. I don't know what this is. I don't know what this is. I don't. I don't. I don't know what this is. Okay. So facilitation February is I guess you can say mentorship that I decided to do here on Al Gore's internet, uh, where because I'm always trying to find ways to help the gang along, right? And there's nothing new that I can talk about. So what I decided to do for the month of February is I'm gonna go back through the Art of Reading price action playlist and we're gonna watch each video together, right? And um if I feel like it requires a little deeper dive into the subject that that video is covering, then I'm going to add more commentary. You know what I'm saying? I may pause it and add commentary during it. I may do it afterwards. And then at the end, I'm going to open it up for questions from the gang. Now, the questions that I entertain, that I entertain are going to be from the Discord members in the Zoom. If they if you have a question, you verbally ask your question and I answer. I'm not monitoring the chat on YouTube. Um Initially I said that I was gonna only answer questions on YouTube if it was done through like a super chat format, but I'm not even monitoring any chat. I'm not looking at chat and Zoom. I'm not looking at chat in YouTube, right? I don't want to get distracted. I don't want to get off on a tangent. So I'm not monitoring any chat, right? If you got questions, it's coming from the people in the Discord. If you're not part of the Discord, it's a link in the description below. For all those who don't know, there's only one, there's no more tier system to the Discord. There's one Discord for all. If you're already in the Discord, you're grandfathered in at whatever price, whatever tier that you're paying, right? For anybody who wants to join the Discord is $50 a month now. If you are in the Discord now and you decide to leave the Discord, when you come back, it's going to be $50 a month. No links can get you back to what you're paying now. That's not going to change. If you cancel and you want to come back, it's $50 a month, right? So with that being said, we did the lingo the last time we met. And tonight we're going to go into, let me share my screen. Screen am I sharing? This screen here. All right, let me share my screen. So we are going to go into, why is that covering up my face? I don't know. Okay, so playlist. The artery price action. That's the boot camp. The artery price section. All right. So tonight we're going to video 2, the open, high, low, close. I like to call this the 4 pillars of price. If you don't know, the open, high, low, and close are the 4 pillars of price. You don't need indicators. You don't need chart patterns. You don't need volume profile. You don't need anything to figure out where price trying to go but price action. And it all starts with the open, high, low, and close, right? Candles, days, sessions, everything has an open, high, low, and close. So let's
Salutations, howdy, however you say it in your neck of the woods,
Am I sharing
allows
my
me
sound?
to welcome you to another episode of The Art of Reading Price Action.
Am I sharing my sound? Sharing my sound?
Welcome to another episode of The
Yeah, you
Art
sound good.
of Price Action. My name is Timothy Lee Rogers Sr., if you don't know who I am. And in this episode of The Art of Reading Price Action, we will be discussing the open, high, low, and close. Well, Tim, what is the open, high, low, and close? Well, I'm glad you asked that question, because without further ado, let us get right into it. Before we get started, if you'd like to download the slides, there is a link in the description down there somewhere where you can download the slides for absolutely free.
I don't mean to interrupt y'all again for this, but when I look at these old videos, the beard was bearding, baby. You feel me? The beard was bearding. I can see why my wife liked me.
And if you want to join the $24.99 mentorship, so that where you get more one-on-one time with yours truly, there's a join button around here somewhere. Click it. Now, let's get into it. The Art of Reading Price Action. What's the open, high, low, and close? Well, Tim, that's super elementary. What are you talking about? The open, high, low, and close. First of all, the type of, you can get the open, high, low, and close off of a bar stick chart or a candlestick chart. The chart that I prefer to use is the candlestick chart. They're easier on the eyes. than the bar charts, but the candlestick chart is a type of chart that displays the open, high, low, and closing prices for a specific period of time. You'll see a lot of time with OHLC, right? And it displays it in the form of Japanese candlesticks. That's what those little things are. You notice the candles. That's what they are, right? These right here.
Nah, don't gloss over that. That's important, right? That's important. A specific period of time, right? You always want to remember the open, high, low, close just don't pertain to a candle, right? Now, the candle displays the price action that happened for a specific period of time. Tim, what do you mean? If you put it on a daily chart, that one daily candle is showing you what happened over those entire 23 hours of that futures trading day. And if you're just looking at a stock, then it's going to be what is that? 8 hours, 9:30, 10:30, 11:30, 12:30, 1:30, 2:30, 3:30. So 6.5 hours. Y'all hold on for a second. What was I? It shows it for a specific period of time, and it's that one. If you watching, so 6.5 hours, 10:30, 11:30, 12:30, 1:30, 2:30, 3:30. So 6.5 hours, that one candlestick is showing you that 6.5 hours for a stock from 9:30 until 4, or the 23 hours of the futures like the ES, the NQ, the YM, right? That one candle on that day, it has an open, high, low, and close, but that's for the entire day. And each one of those 23 or 6.5 hours got an open, high, low, close. Each minute inside those hours got an open, high, low, close. And then not just the days and the minutes, you have different sessions inside the futures. So you have an Asian session, it has an open, high, low, close. You got a London session, it has an open, high, low, close. You got the New York session, it has an open, high, low, close. So everything has an open, high, low, close, and you can utilize the knowledge of the opening price, the closing price, the high price, and the low price to help aid you when you're trying to trade concepts like the power of three, because we know when we're looking for the power of three, if we bullish on the power of three, we want to see price be manipulated below the open, engage with some kind of liquidity, and then reverse and start to rally higher. If you're bearish, you want to see it be manipulated above the open and then reverse and start to sell off going lower, right? So understanding where that opening price is and where that closing price is and that high price is and all that, you can say, okay, we're below the open of the session. So, and I'm bullish. So I can be looking for opportunities to get long in a discount, especially if it's below the open, right?
Things are, you notice the candles. That's what they are, right? These right here. This is a crude depiction of Japanese candlesticks made by yours truly. You want to get in the habit of saying up close candles and down close candles. But why? Because platforms let you change the color of the candles, and all up close candles won't be red. I mean green, depending on who set up the platform. The default is green and red, but you can change them. And down close candles won't always be red. So you want to focus on saying up close and down close. Now, one of the mentees reached out and was like, hey, I'm a visual learner. I like to see the visuals of what you're talking about. And I'm listening. Look at the beautiful chartage. Look at the beautiful slidage, should I say. Look at the slidage, it's beautiful. Right? So we're gonna revisit the candlesticks real quick, because the candlesticks is a big part of reading price. Why do I say that? Because the candlesticks show you a specific period of time. So no matter what period of time you're looking at, yep, you guessed it, there's going to be a candlestick for that. Remember, there's an app for that. There's a candlestick for that. Now, you have the open on an up close candle. You have the high. You have the low. And you have the close. Okay? You have the open on a down close candle. It's at the top of the body. See the difference? The bottom of the body for the up close, the top of the body for the down close. Right? You got the high, you got the low, and you got the close. The only difference in between the two is the open and the close. On down close, we close down or lower than we open. On the up close, we closed up or higher than we open. The top wick shows you the highest point of the top wick, shows you the high of the period. The lowest point of the bottom wick shows you the low of the period. Some people call the bottom wick a shadow. Some people call it a tail. I just say wick, top wick, bottom wick. So that's the candlestick. That's how the open, high, low, and close looks on the candlestick itself. Follow me? Got it? Tracking? Everybody good? Okay. Everybody good. What's the importance of the open, high, low, and close? Well, the open, high, low, and close gives you 4 major data points. What are they? The open, high, low, and close, right? The open is the first agreed upon price for that period. That's very important. That's very important to know. When you got buyers and you got sellers, what is the very first price that they agreed on was a fair price for this asset? That's the open. The high, that is the highest agreed upon price for that period. This is the most anybody was willing to pay for this asset during this span of time. The low is the opposite. It's the low, it's the cheapest, the lowest agreed upon price for that period. This was the absolute lowest during this period that anybody was willing to pay, or anybody was willing to sell their asset at. That's the lowest price that was agreed upon. The close. A lot of people see the close as the most important price out of all 4, because the close is the last agreed upon price for that period. This is the price at the end of all of the hustling, bustling, the back and forth, the pulling and the pulling and the pushing and the pushing, that they said, okay, we can agree that this is the final fair price of this for this period of time. Right? Those are the 4 major data points of the open, high, low, and close. It's the name itself, the open, the high, the low, and the close of the period. Now, not only does the candlesticks, the open, high, low, and close, tell you about price, agreed upon price, it can also show you sentiment. This is very important. The open, high, low, and close can also show you sentiment of the market at that particular period of time, right? So it can show increasing or decreasing momentum, right? When the open and close are far apart, like this big candle right here, when the open and close are far apart, it shows strong momentum. When the open and close are closer together, it shows indecision or weak momentum, right? Like a candle right there, when the open and close are really close, or especially when it's in the exact same spot. When it's in the exact same spot, here's your $10 drinking word for the day. It's called a doji. a doji candle. I think you spell it D-O-J-I. Don't quote me on that. But if the open and the close is in the exact same price on a candle, it's called a doji. So you'll have a wick, no matter how long the wick is, on the top and the bottom, and then it'll be one line in the middle. It can also help in assessing volatility, right? The difference between the high and the low shows the full range of the period, right? So if it's a big difference between, and you can visually look at it, or if you are a super genius mathematician, you can pull out your calculator and you can subtract the low from the high. And if you come out with a big number, it's potentially a lot of volatility because it was a wide range between the high and the low. So the difference between the high and the low gives you the full range of that period, and that can show you, is there any volatility? Now, let's look at a few examples of the candles. This ain't the all-inclusive list of the candles. Actually, I think my financial advisor told me there's like 13 different variations of candles. Don't quote me on that. Anyway, a big candle like this, in this case, it's a big up close candle. Looking at this candle from where it opened to where it closed, it shows strong momentum on the buying side because it's an up close candle showing it opened down here and closed really near the high of the period. That's showing strong momentum a lot. It's a very big range between the highest high and the lowest low. So that indicates possible high volatility, right? And it also indicates a possible trend continuation, meaning you got a lot of momentum, a lot of volatility. The trend can potentially keep going based off of looking at that candle. Now, looking at a candle like this right here, the next one over, the little green one in the middle at the top, in the top middle. This type of candle is showing weakening momentum on the buying side and then a strong shift in momentum on the selling side. Why? Because at one point, the buying had went all the way up to here, and then the selling pushed the price all the way back down to here, and the agreed upon price, you got a longer top wick than you do a bottom wick and body. It's still a green candle, but it's showing that the buying momentum is slowing down and is shifting to a stronger selling momentum, right? And it can indicate a possible retracement because you see the selling momentum is stepping up, the buying momentum is slowing down, and it's a possible retracement coming in the near future. Now, this green candle to the top right, this indicates indecision, right? And it's a pretty nice size candle from wick to wick, wick high to wick low. So it's a pretty decent, it's not as big as this difference, but it's a pretty decent. So I'd say that's relatively moderate volatility can be expected during the time like this when this candle was made. But this is indecision because it's not giving you any indication of who's really in charge, right? We opened in one spot and we closed almost in the exact same spot. So the price that was agreed upon for buying and selling ended up being right in the same spot by the end of the period. So you don't know if it's going up or down. You don't know what to expect coming forward. You need more information after seeing a candle like this. Now let's look at this. You have a strong momentum to the selling side. We're at the bottom left. You got a strong momentum to the selling side. It's not as big as this candle. It's not as big as that candle. So I say it's moderate volatility. And it also shows a possible trend continuation because we opened near the high and we closed very near the low. Possible trend continuation is all of them is showing you some type of sentiment. Okay, this candle here, weakening of the selling momentum, but a strong shift to the buying momentum. Because again, at some point in time, price had sold all the way down to here, but there was a strong shift in buying momentum that pushed it up to close in the top quarter of the entire candle. So it's a red candle, but that's a lot of strong buying momentum. right? And it's a very large candle. And so it's a big difference between the high and the low. So that's high volatility. And so this also indicates a possible retracement because it was a red candle we had sold down. So this would be a possible retracement following to the next candle, the next period, a possible retracement. Okay, and like before, this is indecision, but in this case, is low volatility, very small range, right? Very small range. Same as this indecision, but this one here is an example of low volatility, a very small range candle. Now, tracking, you still with me?
All right. So just like with everything else in ICT concepts, it's all about time and price. Okay. When you want to understand the narrative of what price is drawn to, where does Picasso live? Okay. And we're just talking in that we're talking in this the sentiment of we're only trading with the order flow. We're not talking that you can do the same thing going against the grain, but we only trade and talking going with the order flow. All right. But when you are bullish or bearish, right? When looking at the candles, we're not pattern traders. You want to combine ideas and concepts to help support or invalidate your thesis. So when you see like a candle where we talk about, okay, this is can indicate a weakening of momentum and a possible reversal. Now, if you see a candle like this in the middle of the range, where and it's not at a time when price should be spooling or doing anything like that, then we don't lean so heavily. You don't want to lean so heavily into the retracement or reversal aspect of it. Okay. But when you have confluence, like we're in a discount, we have just traded below a liquidity pool, time-based liquidity pool, a daily low, a session low, anything like that, time-based liquidity pool, and then we see a healthy rejection like this, then we start to look for signatures after that to support the idea of a retracement or a possible reversal. You always want, if you see a candle, a huge candle like this here, where it's like it can be high, volatility, it can be moderate volatility, but we're seeing it push through the liquidity pools and we're not showing any type of rejection, right? Then you can say, okay, we may not retrace as deep into this dealing range that we just established because we're pushing past this breaking market structure, and you can start to look for signatures of a continuation without a very deep retracement, right? You want to be able to combine the understanding of order flow and price delivery with the individual candles, because the individual candles tell you a lot, but it's only a piece of the story. You want to understand the full picture. Hopefully, I didn't confuse anybody. If I confuse you, write your question down and holler at me at the end.
Still cooking with Crisco? All right, let's move on. Now, the significance of the open, high, low, and close is every element of price action has an open, high, low, and close. All elements of price action have an open, high, low, and close. It can be years. It can be months. It can be weeks, days, sessions, hours, minutes, seconds. Every single candle, every single time period has an open, high, low, and close. You can track everything by the open, high, low, and close. And these data points are very important because the algorithm will refer to the open, high, low, and close of all previous periods. It can be the prior minute, to the prior session, to the prior day, to the all elements of price have an open, high, low, and close, and the algorithm will refer to these data points to use as a bridge building mechanism to get to Picasso's house. Remember that, all elements. Now, let's get to the homework. Yep, this episode we will have homework. And what is your homework? Your homework is to go back through price and mark out the open, high, low, and close for each day, right? Also, once you mark the open, high, low, and close for the day, I want you to mark out the open, high, low, and close for the New York session on the 15-minute chart. Right? The New York session runs from 9:30 a.m. to 4 p.m. Eastern Standard Time. And once you do, I want you to do it for each day. Right? And once you mark out the open, high, low, and close for the day, then mark out the open, high, low, and close for the New York session, I want you to take notes on how price reacts to the 4 major data points during each day and each week. Right? And I want you to use the ES chart, the March contract, so that'll be ESH 2024 on TradingView. And I want you to go back for 1 month in time. And I want you to do every day from 1 month back to the present. I want you to mark out the open, high, low, and close on for the day, on the daily candle. And then I want you to go into a 15-minute chart on that day where you marked out the open, high, low, and close, and mark out the open, high, low, and close of the New York session. And then take notes on how price reacted to those levels for that day. Save it as a screenshot. TradingView lets you save it as a screenshot. Don't worry, we're going to go through this really quickly after this. Then do Monday, then do Tuesday, then Wednesday, Thursday, and Friday. You're going to save all of them as separate screenshots. And then once you got that week complete, I want you to look at that week and see how price reacted to the open, high, low, and close for every day through the entire week. Because if you have the open for Monday, that's the open for the week. If you have the close for Friday, that's the close for the week. Whichever day in between had the highest point, that's the high for the week. Whichever day in between had the lowest point, that's the low for the week. So now you got the open, high, low, and close for the week. And you can see how price reacted through the entire week, each day. Just take notes on all of that. Now, let's move over to a chart, and I'll show you exactly what I mean. We're just going to go through an example for one day. Okay, here we are on the ES chart. Again, for TradingView, it's ESH 2024. You can see the ticker symbol up here in the top left corner. So what you want to do, you want to go to the daily chart first, type in 1D, just type 1D on the keyboard and press enter, and it'll pull up a daily chart. Now, we have daily chart showing, and so here we are. And this is Friday, Thursday, Wednesday, Tuesday, Monday, right? But you're going to go back 1 month. You're going to start back 1 month up until the date. So today is February the 8th. Today is March the 8th. So you'll go all the way back to February 8th. That's a Thursday. Don't want to start on a Thursday. So we'll just start that Monday on February 12th. So from February 12th up into today. So we'll start out on each day, get the line. I like to use the trend line tool. You can use the raise, whatever you want to use, but just for this, to mark the trend line.
All right, so it's just going into showing how to mark out the open, high, low, and close Um, I'm pretty sure everybody know how to use line tools and stuff like that on TradingView. So at this time, I'll open it up for any questions anybody may have. If there's no questions, then we'll go ahead and call it. And I'll see y'all tomorrow at 8 o'clock. Do me a favor, hit like for the algorithm. And if you're not subscribed, please subscribe to the channel. Thank you. Anybody got anything? All right. I'll take the silence as a no. Take the silence as a no. Um, uh, real quick. God, man, I cannot stand how I'm looking crazy. I got to figure this out. Why am I looking crazy like this? Got me looking all stretched out. And then it's all dusty looking. Let me go. Let me look at another live video that I just did. Let's see. Go to this video that I just did. Is it my new? Is it the new system that got looking like that? Is it Windows 11 doing something with Zoom? Um, is it Windows 11? All right, this right here. That was the, okay, this was the video right here. I look ashy. I do look ashy, but I don't look stretched out. I do look ashy. I ain't gonna hold you. Yeah, I do look ashy, but I don't look stretched out. Like I look normal size. I don't know. Anyway, all right, man. I ain't seeing nothing. I mean, I ain't hearing nobody ask no questions. So we're gonna go ahead and call it there. Um, tomorrow. If Lord willing, we gonna start on time at 8. Shout out to everybody that was on the pre-market analysis today. Y'all can thank Yolanda and Steve. I think it was Steve because I was just going over price. You know what I'm saying? I did a little bit more than just the pre-market analysis. I was going over price and I started talking about I said if I was trading, I will don't want to see any body closures below here, allowing for the wicks to come here. Said I would enter the trade here, set my stop loss below this, right? Because I was showing stop loss placement based off of just the PD arrays instead of the entire range. What's going on here? Oh, based off the PD arrays instead of the entire range where you have to put it for the mandatory stop based off of a fair value gap, the swing low for the safe stop. Just why is Marco so big on my screen? And I'm not. What do y'all see? Y'all see me? Okay. Why I'm so I keep that's why I keep looking over there because Marco is on my screen this big and I'm just a little picture at the top. I'm trying to figure out why.
Change the view.
Oh, oh yes, the view. The view was like it says speaker. Is that cause you the last person that said something? Why am I? See, when I put it on multi, it's putting you like you're the speaker. It's got you really big on my screen as if you were the speaker. Somebody else say something for me.
Hello, hello, hello.
See, now you big. Now Yolanda big on my screen. And I'm talking right now, but it's not putting me down there.
Try to hide non-video participants.
Nah, that ain't it. I did that one time before, but if I put it on gallery, then it shows everybody at the same size. All right. But while I was trying to give insight onto when I'm trading, this is how I manage stops based off of the PD arrays when it's in a range that's bigger than I want to put a stop based off of just the mandatory stop for this PD array or to the swing low. Well, I was talking about this beforehand, right? And so since I was talking about it beforehand, two individuals, Yolanda and Steve, they go and they place limit orders at this place where I said I would be getting to the trade if I was trading. And then while we're sitting there, I go through explaining everything. And I was like, see how the trade would have played out. Beautiful trade, whatever, whatever. And then somebody wants to unmute and say, I took it. Thank you. Y'all already know it's not a call out service. And I do not want to know that somebody on the other side of this camera, on the other side of this microphone, is pushing a button just because I said so. Now, if you analyze the price and you say, hey, this is the trade I'm getting in, it happens to coincide with what I'm looking at, no harm, no foul. But just to know that you're only taking this trade because I said so, that's just one. We out here trying to learn how to fish. We're trying to learn how to fish. We're not just blindly pushing buttons because somebody said so. And two, it's a lot of pressure on me when I know that there's somebody on the other side of this camera and on the other side of this microphone waiting on me to say something so that they can push the button, right? Because just like I don't like to lose, I definitely don't want to lose somebody else money, and losses are a part of trading. So now when I'm sitting here thinking about, is somebody trying to take this trade? Now I can't focus on the candles. Now I can't focus on what I'm supposed to be focusing on. I'm supposed to be looking at the signatures, but I'm worrying about, is somebody trying to take this trade? So with that being said, I would never give a entry example anymore. It's just right reading the signatures, just like we typically do, right? We're looking at the candles, all right? Because and that's another thing. When you're studying the price, especially initially, when you first really start learning how to study price, don't try to predict anything. Don't try to predict where price is going. Don't try it now. Inherently, we are trying to predict price. That's the truth of it. We're trying to predict where price is going based off of signatures. But when you initially first start, don't try to predict anything. Just study what price is doing so you can see it in real time. Like when you go back and you see what price did while you're back testing and studying, while you're tape reading, don't try to predict anything. Just look, say, okay, we've swept liquidity. All right. With this liquidity sweep, all right, now these are my discount PD arrays. These are my premium PD arrays, right? When it comes back to the discount PD arrays, study how prices reacting at those discount PD arrays. When it goes to the premium PD arrays, study how prices reacting when it gets to the premium PD arrays. And every time you see a PD array support price or resist price, you know what I'm saying? Feel free to take screenshots at that time and annotate your notes, right? If you see it sweep liquidity or deliver to liquidity, take screenshots and annotate your notes and annotate everything that happened to get you to this point, right? And then as you get better and better, and then you start to notice that, okay, I'm able to see what price is doing. Then as your tape reading, then you can start to form a bias and hold a bias. And when you form the bias and hold the bias, don't marry it. Watch for signatures that's going to invalidate it, and watch for the signatures that continue to support it. Just like this morning when Yolanda was talking, I was watching price, and as she was speaking, I drew out a box, and inside the box I put no body closures below or something like that right there. Why did I type that? Because this is supporting what I'm thinking price should do. I'm thinking price is bullish. I'm thinking it's drawn toward the buy side. So since we swept liquidity, created a breakaway gap, and then created a new fair value gap, I didn't want to see bodies closing below the fair value gap. And I was allowing for wicks to go down into the breakaway gap. That's why the stop loss placement was below the breakaway gap, right? But if we start getting body closures below consequent encroachment of the fair value gap, then it's either going to be a deeper retracement or I'm wrong, right? So you want to have things there to help you support or invalidate your bias, right? And you don't try to force your bias. You just get to the point where you can have a bias, but you still want to study the price to say, hey, if price does this, then it should do that. Oh, where's my invalidation point? I'm wrong. It hit my invalidation point, right? With that being said, I will bid you adieu. Hopefully y'all got something out of this. Do y'all, quick question, do y'all see any added value to going through these videos throughout this month and doing it like this with like the extra commentary and just going into a deeper dive of things when I see necessary?
Yeah, very valuable.
Yeah.
Like I say, it could be some stuff you missed going through the first time, and then with you might see something and explain it even a different way, and it helps to sink in some. So I like it.
All right. All right.
I do too.
I know you gonna say something. I know you. How my dog Sherman doing? I ain't talked to my dog Sherman in forever.
He's doing good.
That's good. That's good. Hopefully he ain't got that flu or Zika or whatever been going around. My kids, both of my boys had got it. They just came out the woods day before yesterday. Timothy went to the gym with me today. Here, like, man, Dad, I shouldn't have went to the gym. I think I overdid it. I was sick all last week. Didn't go to the gym. I went to the gym today, and now I'm feeling it. So hopefully he ain't gonna relapse. But uh, hey man, I'll see y'all tomorrow at 8. If life don't start lifing again, um, questions that um will be addressed will be from the Discord members that's in the Zoom. I'm not watching any chats during this series. I don't want to get pulled off to the left or right. Y'all know squirrel, right? Um, do me a favor, hit a like for the algorithm. If you're not subscribed to the channel, please subscribe. Share this out with friends. We're gonna be doing this every night, Monday through Friday at 8 p.m. for the entire month of February. Right? We're going through one video a night. Now, when we get to the ones with multiple videos. We're going to watch all those videos in one setting, so that those evenings will be a little bit longer. And then in the last week of the month, right? No matter where we are in the series, the last week of the month, we're going to do tape reading from 9 a.m. to 10 a.m. that entire week, Monday through Friday. We're going to do tape reading just to watch price and see and study the concepts that we've gone through the whole month. We're going to be looking for the stuff that we just studied throughout the whole month. We're going to be tape reading from 9 a.m. to 10 a.m. And then I haven't decided. Initially I said we was going to do 9 a.m. to 10 a.m. for the whole week, but I was thinking that I might do 9 a.m. to 10 a.m. on like Monday, Wednesday, and Friday, and then on Tuesday and Thursday do like 7 p.m. to 8 p.m. or something like that. Do 7 p.m. to 8 p.m. on Tuesday and Thursday. I don't know. I'll see. I'll see. Anyway, I appreciate y'all. Hey, till the next time I decide to get on Al Gore's internet, which will be tomorrow night at 8 o'clock, and share my thoughts on this thing that we call price action. It's your boy Timothy Lee Roger Sr., aka Aranya Grande. Y'all drop a like for the new background. Y'all see it. Y'all be safe out here trading streets, man. I'm gone.